Today, we'll be reviewing the ICT setup that formed on the 20th of January 2023, and these kind of setups actually form almost every time. With that said, let's get right into it. Right now, we're on the 15-minute time frame, and this is where we start our trading from. So the first thing we do when we get into our charts is we demarcate the range within which we are going to be trading, and that is between 8:30 to 11 New York Standard Time. So that is what is demarcated with these vertical lines. And also we demarcate a swing high that will be expecting price to either trade above, or a swing low that will be expecting price to trade above. And after price does that, we'll be dropping down to the lower time frames to look for the trading setup. This candle, which is exactly at 9:30, you can see this candle traded below this swing low which we had originally placed. So with this, now we are going to drop down as a next step to the 1 minute time frame, where we are going to be looking for our trading setup. Okay, on the 1 minute time frame, the trading setup we are going to be looking for is very easy. We are looking for a very big spike or a displacement that takes out a swing high or a swing low and has at least two opposite candles before that displacement and forms a fair value gap. With that said, let's start looking for it. This displacement looks quite interesting, and if we measure the displacement, you can see it's actually 36 points, and the displacement which we actually want to see is a displacement which is 25 points or greater. So the displacement here is very okay, and we want to see at least two bearish candles before the bullish displacement. But the thing that is going to stop us from taking this trade is that the higher fair value gap after forming three fair value gaps, right? So you can see the third fair value gap here, the candle 3 of that fair value gap is actually bearish, and we want to see this candle to be bullish. With that, this is not going to be a trading setup that we are going to take. Quite a similar scenario right here. You can see a very nice displacement, and if we are to measure the displacement, it's actually 25 points, so the displacement is what we want to see, and you can see at least two bullish candles before the displacement. But same as the other one, candle 3 of the second fair value gap that is formed right here, candle 3 of this second fair value gap, which is this candle, you can see it's bullish, but we want this candle 3 to be bearish to validate the trading setup. Pretty much the same thing that has happened here as well. Nice displacement here to the top, that is about 27 points, but candle 3 of this higher fair value gap is bearish, but we want to see that candle actually bullish. And looking at this other one, you see, if this setup, if we actually had taken this setup as a sell, you see we should have been stopped out of the trade right here. And also this side, if we had taken this setup as a buy, you can see we would have placed our stop loss at the bottom here, and we should have been stopped out of that trade. This kind of looks like a trading setup, right? At least two bullish candles before this kind of impulsive move that took out this low right here. But if we are to measure the impulsiveness of this move, you can see the impulsiveness is just 11 points. So it does not meet one of our rules. So with that, we're not going to be taking that as a trade. Then here comes another one. So you can see right here, there's one fair value gap, two, and the third fair value gap right here. So we are going to measure the displacement right from the bottom right here to this candle, and as you can see, the displacement on this setup is actually 31 points. So has it met all our rules? Let's check it out. We want to see at least two bearish candles before a displacement. That rule has been met. Also, we want to see that our displacement should take out a swing high if it's a bullish setup. And as you can see, this bullish setup right here has taken out this swing high. And also, we want to see that the displacement should be greater than 25 points. And as we measured earlier, the displacement actually is 32 points. And the last thing which we want to see is for the higher fair value gap, which is this one here, which is the third fair value gap. We want to see that candle 3 of that fair value gap should be bullish, which is what has happened right here. Since this is a setup with 3 fair value gaps, even if it happens with just one fair value gap, candle 3 as well of that fair value gap should also be bullish. So we are just going to draw out the different fair value gaps that have been formed. You can see this is the highest fair value gap, which is the third fair value gap. Then there is a second fair value gap that is right down here, and also there is quite a very tiny fair value gap that is formed at the bottom right there, which we can actually barely see. With this, the next thing we are going to do is we draw our fib from the bottom of candle 1 of the first fair value gap to the high of candle 3 of the third fair value gap. After drawing our fib, the next thing we look out for is where we are going to place our entry. And normally our conservative entry is right here at the 50% of the entire range, or that is the 0.5 level here of the fib, and we normally put our stop loss at the bottom of candle 1 of the first fair value gap and our take profit right here at the negative 0.5 level of the fib. But if you want to be a little bit picky, you can put your entry right down here at the first fair value gap. But based on my experience, most of the times price will just come here to the 0.5 level of the fib and go right up to our take profit and hardly comes down here. But this is one of the levels where you can get one of the best entries. We have just placed our trade. You can see our entry was right here at the 0.5 level, our stop loss is down here, and our take profit is at the negative 0.5 level of the fib. So let's see what price is gonna do. Okay, on this candle right here, we got tagged in. At this point, you can see price has actually been playing a lot around our zone, but that does not stop us from staying in our trade, because at this moment, the thing we want to see is price at least getting out of this high before we go break even. If you had placed your entry right down here at the first fair value gap, you should have been triggered right now, but most of the times this does not happen. So this might be a very rare case scenario. Price has actually gone above this high of the entire range. At this point, I normally always like to take my stop loss to break even, because most of the times when I was backtesting, price can get to this high and come all the way back and hit us at our stop loss if we had not placed our stop loss to break even, or it can just continue and go to our take profit. Now that our stop losses are break even, let's continue to see how price is going to play out. And right there, our TP got smashed. This was a review of the setup that formed on the 20th of January. And if you want to see me backtesting the 2023 ICT mentorship with my 7 easy step trading plan, then check out the video right now on the screen. With that said, catch you guys in the next one.